Hello, I'm John Cato, 30-minute trading, and I'm going to introduce you to these indicators again and give me a quick overview. First thing, we have a chart which has support and resistance lines on it. This is called the Darvas lines, and they are mentioned in the legend here, support and resistance. We have a big table here which tells you the strength across multiple time frames. So monthly, weekly, daily, 4-hourly, hourly, 30-minute, 15-minute, 5-minute and 1-minute. And that's the strength of the bull bear butterfly meter. So you can see that when it's green and big, it's going long. When it's red and big, it's going short on that time frame. Same with the BBBR, which is another way of measuring strength, and you can see what it's like. This is the average true range for each of the different time frames, and this is the inherent risk-reward ratio, which is a combination of the average true range and the current spread, and it works out basically what's the probability of being able to make a serious move in any given time frame. And you can see that it's green all the way down to the 15-minute, and it's even amber on the 5-minute. So this suggests that you can trade this asset down to a 5-minute chart and still have reasonable chances of high probability trade success. Other assets, of course, won't come out like that. Then we have down below a thing called the bull bear butterfly meter and the bull bear butterfly R meter, the BBBR meter. That will tell you whether things are long or short. To look over in the data window here, we've got the bull bear butterfly and the BBBR. Watch those numbers as I scroll along through here. You can see the bull bear butterfly I'm looking at 11, 8, 11, 9, 9, 11, 13, 9, 10, 8, 14, that's about as big as it can get, 10, and so on, all the way through there. So basically it's saying, really, all the way through this period, you only really want to be observing the idea of going long, because that's the nature of this trend. The next one is called the Litmus Test. This is a shorter time frame kind of idea of trend. You can see that the trend is beginning to move down, so it's up, that means it's long. Down, that means it's short. Short here says we've got a potential for going short at this point. Now I'm looking at the bull bear butterfly meter over there. Keep looking at that one as well, and you will see that that is saying 10.5 while Litmus is down. So that means that the short term is down, but actually the longer term is still up. So I'm not particularly wanting to take a short trade, but I might want to cover a long trade at that position. So the next thing we want to look at is the Swift Trader. This is one which actually is quite a complicated algorithm, and I won't try and go into details about how it's created, because all of these algorithms are fairly complicated, take a long time to work out. But basically when it's down, it's suggesting that we might want to be thinking about going short, but again, take into account the bull bear butterfly, pay attention to that. So that would be an early signal to cover a long trade, but it wouldn't necessarily be an indication to go short. Same thing is true with the MTrader 3. When it's up, we're talking about going long. When it's down, we're talking about going short. The MTrader, which is a different kind of, what shall I say, speed of response to MTrader 3. That's why it's amber. So if you think about traffic lights, red is really early signal that we're doing something, amber is get ready to go, and green is go. You can decide whether you want to be one of those jump the lights kind of trader, or whether you want to be, I think it's just turning, so we're going to go and do that, or wait until we got the green signal. It's entirely up to you what you decide to do, because what you'll find is when you study using this, and I do recommend studying using it, that you will find your own style. Some people are more aggressive than others. Some people are more gentle and passive than others. And you can see they all have their own benefits. Now we go on down to the S trader, which is the red signals, and you see when that's up, it's long. When it's down, we're saying we've got a tendency to go short. Again, always bear in mind the bull, bear, butterfly, which is the overall controlling strength, and then after that, the litmus test, which is the next one. S-Trader 2 is a variation of S-Trader, so again, it's another red responsive. It's a jump away from the lights kind of trade. Right, so this is how I would be using it. I know all the way through here I'm looking for long, so I'm only really looking for long trades. If I want to be really bullish and aggressive, I'm looking for the red out of the jump the traffic lights trades. This is overnight. Okay, remember this is the US 500. US 500 will be active when the US markets are open. So this is the markets are closed. This is the markets are open. So really, in a way, you're looking for trades here when the market's open in America. And so let's have a look at that. We've got there. We've got that amber trade saying if we break the high of that, we want to be in the trade. And of course, that would have been a good trade. If we take this next one, okay, there, you can see it gets us in a bit later. There we are. And it gets us in later, and that's at 2100 on this broker. This is AxiTrader broker. And AxiTrader is 2 hours ahead of British summertime or British time. So this is, when it says that's 2100, that's 2 hours ahead of the British time, which means that that would be the 1900 candle in Britain. And of course that's 5 hours ahead of America. So that would be the, work this out, 5 off of 9, 1400 candle in America. So that's when America's markets are opening. And you can see that close of that candle there is the first candle as the American market opens. So that's when the American market opens, just there. We can see the volume rising. So through this period the volume is light, then the volume ramps up, and then it runs away, and then the volume's really light again until it starts to pick up and run again here. This was a big pulse spike, so you might say, well, that would be another indication to you, because we've got the big volume push. We've got that. Actually, is it just about markets open? We've got Litmus pushing up, the bull, bear, butterfly. Look at that, showing on the end of that candle, it's showing 11.75. It's very strong. Everything there is telling us we want to go long. So that trade there would take us through there. Okay. Now that would have been a good trade. You get a trade alert off of that, which you'll see in the trade alerts. Exactly what the entry should be, exactly what the stop should be, and all according to the criteria you've set. Let us assume that we want to look at how that works. There is, let's take the Swift Trader, let's take the M-Trader 3 as one to look at. So I'm just going to go and get the charts. They all work the same way, but let's just pick one to look at, the M-Trader 3. And bring that in here. And let's just go through bit by bit what this all means, just so as you know. The first thing says, do you want to see alerts? And I've said, yes, I do. That's the default. Do I want to see cover alerts? That means that if you get a signal going the other way, I want to know on the trade screen, on my alert screen, that there's a possibility the trade is going the other way. So that's basically cover this trade alert. Do you want to show it on the chart? So that means if you've got a trade alert that is true, that meets all of the other criterion down here, do you want to show an arrow on the chart or not? Now, some people do, some people don't. It's entirely up to you. Do you want to show it only when it's making the transition? And I recommend that you do only do it when you make the transition, but some people like to have continual repeats because it's quite exciting, and also that you can get more entry trade alerts being kicked off as you're going along. This one says, do you want it to only give the signal when it's on rising volume? So we go back down here, that one would have been rising volume that we're looking at, and therefore it would, even if that was switched on to rising volume is true, it would still have given you that alert, and transition alert only true, that would give you that alert, and that's true. So then it says the trend, is that the bull bear butterfly? Well, I want a minimum of 0 and a maximum of 14.75 because that's as big as you can get on the bull bear butterfly. So anything basically all the way through this lot I want to know about. If it was going the other direction, bear, then it would give you short signals only if it's on a downtrend. Now the litmus min, I only want to know about that if it's a partial trend, and that's a drop-down box. I can pick it up like that. It can trend or partial trend, and that's what it's saying there. So I only want them when the litmus is above the line, as it were. And above the line is essentially when we have this up above there. So the middle line, which you can't see, but there's a middle line 0 in the middle, rarely settles on 0, frankly. It's normally above the line or below the line. And this is saying I only want stuff that's above the line. Do I want the candle probability to be a bull candle? And that comes back to, let's have a look at this, that candle, which you can't see now because it's out of sight. Bear with me, let me just show you, move this around a bit. Bring that over there and then re-edit it there. So this is saying the candle probability is true. I want a bull candle. Well, that's a bull candle, so give me that alert because it says that's a very bullish candle rather than a doji candle or one tending towards the other way. So a red candle or a doji would not show up if you have bull candle probability true set. You might, of course, want to say false. So I'm going to say I want to know about them all. Reward probability means that is there a high probability that the reward's going to pay back? Now, sometimes that's going to be, you set that to true or false. I've set it to false because I want to know about everything. Now, also, we've got the entry style. So if I'm going through this too fast, don't worry, you can pause the video and you can replay it. So let's pick this up here. Entry style is what kind of entry do you want? So I'm saying I want it prudent. That's at the end of the wick. So if it breaks the top of that wick, I want to have that entry to be given as that rather than very close to the close. But I could say close aggressive, so that would be that I want it to give me straight away close. I recommend wick prudent as being the right way to do it. Now the stop distance, you can have lots of different stop distances it calculates. 80% of the candle, the whole candle, the average true range, 80%, the average true range, all of the average true range. The prior opposite, that means the previous red candle. Support and resistance, that means these Darbas lines, or the average true range and 160% of that. Now, again, your choice. That will give you more aggressive or less aggressive trade sizes. So you might want to be more prudent with support and resistance because that's where you want to put your stop, or you might want to be very aggressive about it. Again, that's entirely up to you, what you choose, what your trading style is. I recommend support and resistance. Risk percent here is set to 0.9. Now that is very prudent, keeps you in the game for a long time, risk percent. If you want to see it as a more rounded value, of course, you can just change that to 1%, like that. Or if you're very aggressive and you think this is working a lot, you can change it to 3% or anything you want, really. I'm going to put that back to 0.9 because that's very prudent. But again, it's entirely up to you and how aggressive you feel. I would recommend doing that to start with, and then if you like the way it's working and you've got your feel for how this is working and you've got a strategy that you map across these that works for you, then you can change it and move it up, of course. Now the risk basis is equity. You can choose, am I going to calculate the risk based on my balance? Am I going to calculate the risk based on my current equity? So if I'm in profit, that would be a bigger number, and if I'm running a loss at the moment, that would be a smaller number, or the free margin, depending on how much free margin I've got left. That's again entirely up to you. I like to run it on equity because as the profit gets bigger in my trade account, I've got more money available to use, so I will then modify the trade size based on that. Over here I can do alert message controls, so I can actually click it through like that and click on true, and it will push to my mobile phone. And if I do that, I can push it out to email. And if I push it out to email, I can put an email comment prefix on it. And if I have the email comment prefix then there, it means that all the emails that I get, I can filter out based on this prefix, which means that I can quickly delete them all out of my email system later on, or I can quickly find all the trade alerts that I've got. They all work exactly the same as that, so let me just show you. For example, if I click on mTrader, they're all exactly the same. And if I click on STrader, they're all exactly the same. STrader 2, they're all exactly the same. So the principle applies across absolutely everything. And this is something that's come out in this new version, which is this version here, version 7.01. I hope you found that useful. Do pause the video, rewind it, go backwards and forwards, do whatever you like. Look for these trade opportunities here, like that. If you don't want to have it on a bullish candle only, do come back and change it on that, as I showed you how. Come back here, and trader 3, on there, candle probability, I've set it now to false, right, rather than true. And once you've done that, all of that, set it up the way you want it, then simply save your template on there, save template as, okay? So you can just get in there and save it as something or other. And I've got all sorts of other trading systems on there, new code on its way every now and again. So this is John Cato, 30 Minute Trading, wishing you happy trading.